Massive crash of the tech stock values have plagued the market, with headlines like Apple lost $180 billion in market value today, and it is the biggest loss for companies ever. Another headline, Apple stock heads for the worst day since March among tech weakness. And another headline is stock market live update. The Dow Jones is down 800 points in tech's worst day since March. Tesla slides 9%, among so many others. What is an investor to do? How should you protect your money? Have we hit the bottom of this drop, or will it continue to fall? All this and more in today's video. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, and volunteer paramedic. Apple slid 8% on Thursday, a totally rotten day for technology shares. And that translated to a loss of roughly $180 billion in market capitalization. It is the largest one-day loss in value for any company ever, but it still leaves Apple with a little over $2 trillion valuation. Prior to yesterday's drop, the largest one-day market cap loss for any US-based business came from Facebook stock back on July 26, 2018. This was following the earnings report prior that evening. Facebook's second quarter results were fine, with the earnings and sales matching what Wall Street had figured. But this had just followed the Cambridge Analytica scandal, and other business pressures were starting to push down on the business. Because of all that controversy, the stock tumbled over 19% the following day, losing $119 billion in market value. Now here's a quick recap of Thursday's sell-off by the numbers. The Dow Jones fell to 808 points, or about 2.78%, and clinched the worst daily performance since June 11th, when it fell 6.9%. Week to date, the Dow is down 1.6% on pace for the worst weekly performance since June 26th, when it fell 3.31%. Microsoft had the most negative impact on the Dow, accounting for 94 points against the index. The S&P 500 fell 126 points, or about 3.51%, and it is the worst daily performance since June 11th, when it fell 5.89%. Week to date, the S&P is down 1.5%. Also, the NASDAQ composite fell 598 points, or 4.96%. Week to date, the NASDAQ is down 2.03%. Okay, the numbers sound bad. We all know that. But what should we do? Well, if we look at the S&P's information technology sector, prior to yesterday, it was up 10% in the past week. So even a 5.8% correction is really not that bad. Then if you factor in yesterday's fall, we're still up 14.28% this quarter and 30.51% year to date. Now let's take a deep breath and we can read beyond these headlines. What caused this drop? Well, pinpointing the exact reason is pretty much impossible. There are so many factors at play in the market, but honestly, the number one reason is just pure human psychology. Now, it's sad to say, but the vast majority of humans, when they are investing, they act just like lemmings. Remember that old video game from the early 90s? For you young kids, just ask your parents. Anyways, most investors in the market, they're just sheep. They blindly follow the herd from one extreme to the next. If you recall a week ago in my video titled, "Is it too late to buy Apple stock?" I said, the tech stocks, Tesla, Amazon, Microsoft, Apple, and the Global X Cloud Computing ETF, that's one that tracks hundreds of tech companies automatically for you, all have had tremendous growth and in the long term have great possibility for stability for the foreseeable future. I firmly believe that these guys will continue to be dominant and profitable for decades to come. Now, that being said, it is essential to realize that many investors that purchased Tesla at $400 a share, a few months ago, or Apple at $200, will probably sell some of their stocks right now and take a little bit of profit off the table. This is completely normal whenever a stock's value increases so much in a very short time. So it's pretty likely that these stocks may drop 1, 2, 3, 5, 10%, maybe a little more, in the short term, but I feel in the long term, these guys are going to bounce back and it is going to be a great investment. The problem is so many people blindly purchased Apple and Tesla stock as the shares kept climbing higher and higher and higher. But the second it turned a little bit to the red, they immediately hit the sell button. This rush to sell causes the prices to drop even further, which in turn causes more people to sell, thus dropping the price even more, and it's just a vicious feedback loop. They are missing the key to investing in the market. You pick a stock or a group of stocks that you have strong confidence in their long-term prospects, and you invest in the long haul. Just like Warren Buffett said, if you aren't willing to own a stock for 10 years, then don't even think about owning it for 10 minutes. Basically, he's saying that you need to invest in something for the long term. Don't just do individual day trades. Yes, you can make money in day trading, but the thing is I personally would much rather invest in a company like Apple or Tesla or Microsoft, even Facebook, even though they have some problems, because I know that they're going to be there next year. They're going to be there in 5 years. They're most likely going to be there in 10 years. And they're going to continue to make profit. That's what I like investing in. So with all of this in mind, what am I doing with my money? Well, honestly, I'm buying Apple and Tesla stock on the red days. I don't look at negative days with fear. To me, it's just a sale, and I am buying. Think of it this way. When you purchase a carton of eggs for $4.99, then you come back to the store next week and you find that they're on sale for 50 cents off, you don't go and immediately panic and start throwing all your old eggs away because they lost value. No, you just happily purchased 2 cartons this week knowing that you saved $1. And that is what I'm doing today. I'm tossing Apple and Tesla stock into my shopping cart, and I am running my fat butt all the way to the checkout before the sale is over. Speaking of my fat butt, you guys need to check out my second channel that I launched a few days ago called Fat Boy Fitness. The link will be down in the description. It shows basically my journey of trying to get my fat rear end back in shape. Anyways, back to the news. Now, of course, you guys know that this is the part of the video where all my chained up lawyers in the basement start getting a little bit rowdy and they demand that I make a quick legal statement. I'm not a financial advisor nor a stockbroker, nor do I have any certifications of pretty much anything useful to this conversation. You should, seek, competent advice, I guess, from one of those certified guys that has papers on the wall or something. Remember, I'm just some dude on the internet. Alright, now that we've humored the lawyers for a minute, let's get back and summarize everything for you. The technology stocks were run up very high lately, especially Apple and Tesla due to their stock splits. A temporary correction was completely expected. Now, have we hit the bottom? Who the heck knows? And in fact, anyone that tells you that they are 100% certain that this is the bottom or that it isn't the bottom, they're lying to you. All I can say is, for me, I see this as a great buying opportunity because I feel that both Apple and Tesla will be here for the long haul. And anyone that misses this chance to buy stocks today, I think is going to be very disappointed in the future. Now, that future day might be 30 days from now, 3 months, 6 months, a year, who knows? All I can say is that I'm extremely confident in these companies in the long haul. Now is the perfect time for you guys to check out the M1 Finance Pie that shows exactly what stocks I'm currently investing in. You should check out that link in the description where I set up a very special brokerage account and I started it with $250. And that way you guys can follow along and do the exact same investment and we can track it together. I also set up automatic deposits of $50 every 2 weeks, and I recommend you do something similar. You should also check out Webull as they're doing an amazing promotion this month where when you deposit $100 in their stock trading platform, they will give you 2 stocks, with one of the stocks being valued up to $1,600 instead of the $1,400 in the past. This is a great deal, and you should take the free stock, and if you don't want to use their trading platform, honestly, when they give you the free stock, just cash it out, move on. Switch over to M1 Finance or Fidelity or whatever works for you. Thank you very much for watching. If you found this information useful, please share it on your social media accounts with all your friends. Well, unless I guess you don't really like your friends and you don't want them to have any sound financial advice, then I guess you could just keep all this information yourself and not share it with anyone. But in that case, at least subscribe and make a comment or something down below. That way you can still help and support the channel. Thanks, and I'll see you on the next one.